All right. Hello and welcome again to everyone to the September Investment Outlook edition. Thank you all for joining us. To our friends dialing in from Singapore, Asia Pacific, and the Middle East, a very good afternoon and good evening. To our friends dialing in from Switzerland and Europe, a very good morning. The theme for today's call, really, we would like to explore the potential for a year-end rally as we begin gazing into 4Q 2024. But not forgetting the short term, of course, right? What are the chances of us dancing in September, or should we only wake up when September ends? And here to share with us her thoughts and perspectives, as always, we have Katalin Tischhauser, Sygnum's Head of Investment Research. But before we proceed, a gentle reminder, as always, that all content and opinions presented in this live stream do not constitute investment advice. All right? And with the formalities in place, let's then begin by looking at three key observations that are appearing to set the scene for the month. First, we look at Fed Chair Jerome Powell's recent Jackson Hole speech in August when he said the time has come for policy to adjust. We have seen investors turn towards risk assets in recent weeks, holding the view that the Fed is about to embark on its rate cut cycle. The second observation as well is we hear concerns arising from the direct token sales liquidations, as well as the spot Bitcoin ETF outflows. On top of that, of course, we also wonder whether a Democrat win in November might have implications for the crypto market. And lastly, the third observation, we look at it at a granular level and we ask, in view of Ethereum's relatively flat year-to-date performance, we also begin to hear chatter of whether Solana can take over the crown and being back in the spotlight from Ethereum. So on that note, let's begin. First question we have in mind, right? With the backdrop that we have established, let's start today's discussion with the elephant in the room. The looming expectation for a Fed rate cut 2 weeks from now. The markets are already pricing in 25 to 50 bips cut. And it appears that the Fed has now shifted its focus to managing a soft landing as opposed to taking on inflation by the horns, right? Katalin, on this end, how do you see the current environment position for risk assets? In particular, what are the implications for crypto?
Yeah, thank you for starting with maybe the most important big picture point, that the macro backdrop is actually favorable and benign. Now, having said that, we are seeing a lot of market volatility. We are seeing this in global markets. We are seeing it in crypto as well. And the way I see it, this is due to basically we have a system that is fundamentally fragile. And simultaneously, we see the Fed being actually really successful with kicking the can down the road, so to say. And this picture of a rate cut cycle starting, coupled with a likely soft landing, obviously it's not certain, but it looks like a recession would be, for now, definitely avoided. This should be an ideal backdrop for financial assets, for most asset classes. And actually, all year, in anticipation that this has been the trajectory of travel, equity indices have been making all-time high after all-time high. This is not surprising. Basically, the likeliest scenario is we're going into an ideal backdrop for risk assets. But this is coupled with this underlying nervousness that something could break actually any time. And basically, funding growth with escalating unpayable debt is not sustainable. At some point, this is going to hit the wall. But that point could be actually not very soon at all. So we see this picture that the market's leaning bullish, but very nervous. And every time, actually, most of the macro prints have been positive. On inflation, Q2 GDP growth revised up, and generally most of the data that comes out has been leaning positive or neutral to positive. But when there is a negative single macro print that comes out, the market reacts in quite an extreme way. There is almost an instant panic in terms of the market move, like at the beginning of August, also recently, a couple of days ago. And also we see risk metrics like the volatility index VIX spiking instantly. So we're kind of operating in this bullish but really nervous should there be signs that something is breaking. And then coupled with this, we of course also have the effect of seasonality, which doesn't necessarily make a lot of sense, but it is still there. September has been historically the worst month for global assets, for bond stocks, gold, and also for crypto. It's not quite clear why, and it's always, it is then historically followed by the quarter that has been historically the best quarter for both global markets and risk assets, which is Q4. So it is, even if we cannot necessarily say why September should be such a difficult month for almost all asset classes, it can become eventually a self-fulfilling prophecy. Just kind of knowing that this is what usually happens makes people quite wary, and it very quickly sort of follows that historic pattern even out of knee jerk. So we can see, we could see over the next few weeks quite volatile, weak markets, and then followed by a relief rally. Now that would be my base case expectation, but of course it is possible that something actually there will be signs of an impending recession, kind of a cluster of data points rather than one or two isolated data points that get negated by positive data points afterwards. It could be that we get evidence that maybe the economy is going in a negative direction, and Bitcoin, of course, then may participate in such a down move. But should there be serious stresses in the US economy and financial system, I think it's good to remember that Bitcoin and gold then provide alternatives ultimately.
That's a very key, interesting point, Katalin. So maybe perhaps worth discussing the behavioral dispersion in asset classes in that case, if you will, right? So for instance, we look at risk assets ending the week on a high, post Jerome Powell's comments at Jackson Hole, right? And US, as you say, right, US equities reaching all-time highs. While we had that positive, trajectory per se in the traditional asset classes, crypto, on the other hand, has been a bit quiet and a bit sullen, so to speak. Yeah, and you've mentioned as well that the effect of seasonality, which I think it's very meaningful. And then again, as they say, right, history doesn't often rhyme, but at least order doesn't repeat, but often rhymes. Do you find that that dispersion in behavior in crypto being a bit quiet, whereas you have that bit of volatility in the traditional markets? Are you surprised, or have you been surprised by such disparity?
I mean, a little bit surprised because we had this kind of positive turn of events after Jackson Hole and so on. That should be taken as good news for the crypto markets. A little bit surprised, but obviously there were specific reasons, idiosyncratic reasons within the crypto market. And actually the crypto market is still mostly idiosyncratic. Really the only extended period of high correlation that crypto and risk assets had were in 2022 during the bear market. And even then, I would kind of ask the question whether that was somewhat accidental, coincidental correlation, because, for example, a lot of the down moves in crypto were due to, for example, the failure of the Terra USD stablecoin, the fraud at FTX, and that this happened coincidentally with a bear market in risk assets. Some of it is accidental. So even that correlation, I think, should be a little bit discounted and not taken as that's what the correlation is supposed to be. So the crypto market, I'm not surprised that the crypto market dances to the beat of its own drum. I think that's still more the norm than not. Of course, it's not always the case, but it is still very often so. And the factor that has been really the single biggest factor depressing the crypto market over the summer, including very recently, has been supply. Unusually large supply coming to the market, some of it as a surprise, some of it kind of expected eventually, but then the timing coincided. A lot of bankruptcy proceedings concluded close to each other in time, some from 10 years ago, some from much more recently, but then kind of they all started distributing quite a lot of crypto to creditors simultaneously. Then we had, of course, the surprise sale by the German government of about 3 billion worth of crypto. In that case, Bitcoin. Then jump trading, it seems, are maybe getting out of crypto trading after their US regulators are investigating them for their role in the failure of the 2022 failure of Terra, and they were also then suddenly liquidating, in their case, a lot of Ether and a couple of other things, but Ether was the biggest part of it. And so there was actual supply, some of it surprising, and it really affected the market, obviously just shifted the supply-demand balance. And after that, the market has also become very nervous about supply. So since then, news, rumors, fears about more supply very quickly create a bearish move in a given day when such kind of news of rumors or fears circulate. But actually, a lot of these fears have proven to be unsubstantiated, and a lot of the rumors actually kind of lack substance. The market is just very sensitive to this because this has been the biggest factor in the last couple of months depressing the market.
Sure, great. So on that end, maybe right. To take on your point, Katalin, given the the behavioral dispersions, clearly your insightful comments about how the supply elements are coming to play. So we've seen markets really exhibiting some form of a Jekyll and Hyde tendency, right, across particularly the last 1 month, right? You see at the start of August, and as you say just now, right, at the start of September, the same kind of reflection behavior. So besides the anticipated rate cut by the Fed in that case, is there anything else that you think could point encouragingly towards a potential rally in 4Q?
Yeah, so, there are, first of all, I would mention two things. One is that what is pointing in a negative direction, I think would just turn out to be, for now, the market is nervous about it, but it could just turn out to be no issue and then provide the relief that the market needs. And this is, for example, these rumors about the US government selling 200,000 Bitcoin stake in the near future, which I think it's based on no actual news or announcement or fact. The US government has been selling a little bit of Bitcoin, but in relatively smaller chunks. This year, they sold maybe 5 to 10% of the stake that they had from these kind of seizures from Silk Road and so on. And but that they would dump $12 billion dollars worth of Bitcoin, as some of the headlines would have it. There is really no indication that anything like this would be happening. This is not the pattern of their behavior anyway. And now more recently, we have seen that presidential candidates, of course, call for the establishment of a Bitcoin reserve, but also a bill has been filed in the Senate to that effect, a 1 million Bitcoin reserve. So just as this is going on, I think it would be maybe even less likely that suddenly the entire stake is liquidated in a short space of time. And if there's small selling, a few thousand Bitcoin here and there, I don't think that really affects the market too much in reality, like it shouldn't. It's the fear and it's the implication that does, it's the sentiment. And the same with Mt. Gox movements. Mt. Gox actually just distributed 100,000 Bitcoin to creditors. Which is the bulk of what they had. This was the so-called early redemption for creditors after 10 years. So that's a loose definition of early. But so any further movements after they actually just conducted these early redemptions are actually more likely just wallet movements into cold storage and so on. So we can see, but also 100,000 Bitcoin, which is $6 to $7 billion worth of Bitcoin. That's really a lot. Distributed really had almost no market impact. And we could see that on the exchanges where these like Crack and Bitstamp, who participated in delivering the Bitcoin to creditors, that on the day when the Bitcoin was delivered to creditors on that exchange, there was almost no change in the trading pattern in terms of the selling pressure and the balance. There was some increase, a slight increase in selling pressure, but well within the bounds of day-to-day variation in kind of selling pressure, buying pressure on the exchanges. So basically that massive distribution occurred as actually many expected without kind of much selling pressure. So once that's behind us, to kind of expect that when another 10,000 or 4,000 Bitcoin is moved, that's now going to do something terribly negative to the market. I think these fears and expectations are not really well-founded. So there could be, because they have been so dominant, a relief from that can be one positive. I guess it's a negative of a negative being a positive. But what is an actual positive is the shift on the US political front, which is not priced into the crypto market at all. This has happened roughly since May. And basically when crypto became a voter issue, it was recognized that it was a voter issue. And prior to that, it was RFK Jr., Robert F. Kennedy Jr., he's been campaigning on a Bitcoin or crypto platform all along. But really, it became a big deal when the Republican Party really strongly embraced a pro-crypto stance. It's even in the official party manifesto, the party platform. Right. Donald Trump, of course, made extremely pro-crypto comments that he will be the crypto president and he will do this and that and that in the last kind of couple of months. It's maybe not surprising, and also simultaneously the almost half of the corporate contributions in this election cycle came from crypto businesses. Mm-hmm. So that's also interesting. So it's definitely in the consciousness, and the Democrats have also responded. Actually, both campaigns have moved in a positive direction towards crypto. So in the case of the Republicans, it was a move to a extremely positive, definitely supporting the crypto industry, it is being a priority. And in the case of the Democrats, it was more moving from a previously anti-crypto stance mostly, and even you could say strongly anti-crypto stance to a more accommodating stance. But I would say that what is maybe even more important than all the rhetoric, and there has been rhetoric on both sides, more on the Republican side, but on both sides, but the developments that have already actually taken place, I think, are even more important, which is basically examples like the bipartisan support for various crypto bills, the approval of the ETFs, especially of the Ethereum ETF, which was quite contentious because of is it a commodity, is it a security issue, yeah. Ending multiple investigations and lawsuits by the SEC recently, sending out no action letters. So these things have actually already happened. It's under the current government, it's under the Democrats that these changes have taken place. And campaign rhetoric is one thing, but as they say, watch what they do, not what they say. And and there have been a number of positive developments taking place already.
Lovely switch, into that topic, Katalin. So maybe perhaps just to end off this commentary, or rather this section on the political developments that we've been talking about since even our previous live streams, right? It's gathering momentum, particularly since we're stepping towards November, and you can hear all the drums beating, so to speak. For those of us who, or rather those in the market who continue to hold on to that bearish view that should Kamala Harris win, what are your thoughts? You think there's reason to be overly bearish, or reason to be optimistic as well?
The market trades the election as a Trump trade for crypto. It's clear that's how it's seen in the crypto market. That's how the market moves, and that's also the narrative in the market. I am actually not sure that is the reality of the situation in terms of what will be the outcomes for crypto under a Trump versus a Harris presidency. And we see basically the Harris campaign is basically non-committal on crypto, tight-lipped, let's say.
Right.
And the Democratic Party platform does not mention crypto. And people take this as a negative, but I don't think that's what we should conclude. Basically, in the run-up to the election, it's very important that campaigns don't alienate constituencies. So some of the Democratic Party's constituency lean in a anti-crypto direction for sure. And so making strongly pro-crypto statements, the Democrats have made certain pro-crypto statements, so that's also there. They also recruited some for the Harris campaign, some ex-crypto executives like from Kraken and Binance. From Ripple and Binance.
Right.
So there have been certain positive statements made and positive moves, but to be very overt and to kind of make very strong statements simply would alienate some of their constituencies exactly in the last couple of weeks in the run-up to the election. So it makes a lot of sense that they don't do that. But we have seen that the Harris campaign has also been reaching out to crypto businesses. There was at least some positive comments made at the Democratic National Convention. There has been, for example, this Crypto for Harris initiative, and there was a Crypto for Harris event. The Senate Majority Leader, Chuck Schumer, for example, said the Senate will get crypto legislation done this year. That's extremely positive rhetoric from a leading Democrat, and obviously if this really does happen, that would exceed in terms of the timeline for crypto legislation, massively exceed the market's hopes and expectations. So would be very positive. And also, like I said before, in the case of, necessarily because Trump is not in power, but in the case of Trump, we have rhetoric and we have promises. But the Democrats who are currently in power, we can see that things have already changed and things are moving in a positive direction. So I think also Trump has not been kind of great. He's great on rhetoric and has not been so great in his previous presidency, certainly in kind of delivering on campaign promises. So I think the market may be overestimating how much Trump will do and maybe underestimating how much the Democrats actually are already doing. So there could be differences. I'm not saying that it's the same speed or the same extent or the same outcome under the two scenarios in terms of election outcome, but I think the trajectory is positive for crypto irrespective of the election outcome, and that's not in the market. That's not in the prices.
Wonderful, Katalin. Good to hear. So thankfully, we've got that silver lining to breathe, if you will. Yeah. So as we approach the top of the hour, maybe, Katalin, a last question or a last topic to really just spend some time on, and perhaps less subjected to human behavior, if you will, sentiment. So Ethereum, right? Let's talk about Ethereum a bit. Is it losing ground, you think? I mean, Ethereum has had a tough time recently. Transactions have declined by 15 to 20% since an upgrade in March. And also you see the spot Ethereum ETFs, which was supposed to be that highly anticipated darling, unfortunately hasn't really played to that storyline as well. So on the flip side of this, on the other hand, people are, there's that chatter that Solana might be the next little one to come up the curve, so to speak, right? Network activity, revenue, market share has continued to grow strongly. Mm-hmm. Could Solana soon challenge Ethereum?
Well, that's a big question and a complex topic, but a couple of comments. So first of all, as you say, Solana is doing really well, growing revenues, growing network activity, growing market share. It has already overtaken pretty much all other protocols along most metrics, except for bar Ethereum. So it really has already done very well. The price of Solana has done very well as well, justifiably. And now with the upcoming launch of this Firedancer validator client, which will exponentially increase Solana's already very high scalability. So that's a further win in the sale of Solana. So there's definitely these positive trends and positive sentiment and narrative going on there. And just as you say, the market has been disappointed in Ethereum, both in Ethereum's scaling approach. We have seen that after the last upgrade, which was specifically aimed at improving scaling, helping the Ethereum-based layer 2s, the activity on the Ethereum-based layer 2s tripled, which is fantastic. But on Ethereum itself, it's been declining since. It's actually, since that upgrade in March, it's down maybe 15-20%. The transaction volume on Ethereum. Ether became inflationary again. So it has so far proven to be value detracting from Ether's value, even though the ecosystem overall is scaling and growing. And again, as you mentioned, the launch of the Ethereum ETFs has not been great. And this also further affected sentiment. And actually, Ethereum has been underperforming and just continues to underperform for now. But let's say since the beginning of 2023, since the beginning of last year, the price of Solana in Ethereum increased 5-6-fold, and the price of Bitcoin in Ether increased by 75%. So that's both relative to Solana and relative to Bitcoin. That's tremendous underperformance for Ether over this period, and for now it's continuing. So these kind of metrics, the price of Solana in Ether, the price of Bitcoin in Ether, are making kind of new recent lows. So the sentiment is very negative on Ethereum. But Solana, despite Solana growing very strongly, despite Solana now overtaking Binance Chain, Polygon, Tron in most areas, and basically just coming to compete with Ethereum now, Solana's market share relative to Ethereum is still tiny. It's still, the gap is still enormous. And the gap is even greater if we actually, because Solana scales, it's an all-in-one scaling, and Ethereum scales with the layer 2 protocols. So maybe it's a fairer comparison to compare Ethereum plus its layer 2s in terms of its growth and transaction volumes and network activity to Solana. And if we make that comparison, then first of all, Ethereum plus its scaling protocols has been growing strongly, actually. Very strongly, and also the gap between that network and Solana is even greater. And also, Solana has made headway with some really economically useful and important sectors of the crypto market. For example, the hot sector of decentralized physical infrastructure networks, the DePIN sector. These projects have actually been favoring Solana. Some of them even moved from Ethereum to Solana, like Render or Helium. But having said that, the vast majority of the growth and of the activity on Solana is from meme coins. It's from launching and trading meme coins. It's actually about 90% or more of the activity, and that's not great. I think, first of all, it introduces a risk, because eventually this meme coin casino can come to an end. This is not an economically useful activity. These tokens have no fundamental value at all. But also, if we compare Ethereum's market share amongst the economically actually useful projects to Solana's, then the gap is even greater. And also, I think, just in terms of market psychology and sentiment, after such a huge degree of capitulation ongoing for almost 2 years now on Ethereum, it could be that negative sentiment is going to bottom soon. It has gone so far. And basically, I think at this point, Ether is prone to upside shocks on any kind of positive turn of events or any catalyst. And just as we are seeing, for example, with the Bitcoin ETFs, that the institutional inflows are ramping up slowly and gradually over time, I think we will see the same on the Ethereum ETFs, that the inflows will come slowly and gradually over time. But when they come after so much capitulation and such negative sentiment, Ether is definitely prone to upside shocks.
Wonderful. So as we reach the top of the hour, Katalin, thank you so much for reminding us to keep an open mind, right? When we think about your tokens or even about the markets. So I think it's always good, keep an open mind and a balanced perspective, if you will. So again, thank you, Katalin, for unpacking the details as we come to the close for today's session. To our listeners, again, for a deeper dive into the research and the important topics driving the crypto markets, please download the September Investment Outlook. Visit our website, our homepage, go to the Learn section and click on Research and Education. That's where you can find our research pieces, our thought articles, as well as the intellectual capital we have here from Sygnum regarding the crypto markets. And also, please do join us on our LinkedIn community to stay up to date on new launches, new news, as well as research going out. So on that note, here's wishing a good day, good afternoon, and good evening as we sign off. This is Sygnum. Thank you.